Do not invest on today's information. You invest 6, 12, 18 months ahead. Where is it going to be in 6, 12, or 18 months? 6, 12, or 18 months, are people going to buy more cars or less cars? Use more technology or less technology? Buy more oil or less oil? Well, the answer is bloody clear. Please don't invest in today. It's the biggest mistake everybody makes in markets.
One of the key things in markets and investing is time horizon. Again, what the hell does that mean? Time horizon is when you think your trade is going to play out. So let's say you think that Bitcoin is going to go from 24,000 to 50,000, but by when? Because the length of time it takes, it often goes a very volatile path. So if it's a long-term trend, you tend to put less money into it because you might need to have swings like 60, 70% that we've just had to capture the upside. So, for example, I think Bitcoin might go to 100,000 over the next year or two. I know that we might have a 50% drawdown, but it's going to go 4x. So that's an 8-for-1 risk reward. Okay, that's great. But if it goes in this path, I need to be careful. So therefore, I size my position accordingly. So time horizon is the amount of time you expect your trade to play out. Usually you shouldn't mess with it because once you set the time horizon, you set your trade sizing around it and then you let it play out. One of the things many people ask me is, why, if you think there's a big recession coming, why are you bullish on markets overall? That's a bit complicated, but really it's about the forward-looking expectations of markets. You see, a market's job is not to look around them today and go, well, things look pretty bad, so let's be really bad. Their job is to look forward. Now, don't forget, many of these markets have priced in a recession. And so therefore, anything that's looking like the change is going to come is going to cause the markets to turn around. What kind of change am I talking about? I'm talking about the Fed not raising rates much further. And again, we're looking out, the markets will look out 6 months, maybe even longer, maybe a year. And they'll say, listen, the Fed probably aren't going to go much beyond, another 75 basis points or 100 basis points. So therefore, we can start breathing easily because things are going to change. Also, if the economy is weakening, then in the future, the Federal Reserve always, when the economy weakens, end up stimulating. We're starting to see stimulus in Europe, for example, where they're offsetting gas bills, both to producers like industrial companies, but also to households. That's a form of stimulus. And we're seeing stimulus starting to rise as governments around the world realize that they need to help consumers and businesses in this energy crisis. But I think as growth evaporates, we'll start to see more stimulus too. So that's why I start to look at prices like equities and crypto and say, maybe they've bottomed. As I said, it's not a certainty, but I kind of feel like it's around here. Maybe it's a one spike lower, but I think that the bottoming process is in place. And over the next 6 months, we'll see much stronger asset prices as the economy weakens. And people say, but we're in recession. The stock market should be collapsing. They've already done their work. Markets are really complicated right now. We've got some extreme things going on. The dollar is going up very fast, and that's a wrecking ball for the global economy as all of these economies start to see their currencies weaken. The yen, which is one of the largest currencies in the world, has been in free fall. So these are kind of scary times, but all of these countries that are having a weaker dollar are all exporters. So therefore, the goods that they export get cheaper. This is a deflationary pressure. Remember, I've been telling you for many weeks now that the oil market's going to break lower. Today, it finally broke lower. So we're now down at about $81 or so. I still think it comes to 60, maybe even lower than that. So we're going to see a lot of this inflation fears coming off. Most commodities have come off. Housing prices are coming off. Rents will eventually come off, and we'll start to see unemployment rise. So we're getting the setup where the macro change is coming. That change is when the Fed stop fighting the previous war, which is inflation. Inflation is evaporating super fast, as is global economic growth. Last shoe to drop is the bond market.
Crypto is the horse I back the most. The fastest horse in the race, best risk-adjusted returns, high correlation to this global liquidity index, which is our everything code. So we know how the asset price behaves, which gives us a competitive advantage when we use our proprietary frameworks. Bitcoin is just a macro asset. All of the noise you see from the Financial Times, all the newspapers, to all of the media, to the noise on Twitter, to the naysayers, oh my God, this is magic internet money, this is magic beans. They're all wrong. They're all wrong. Bitcoin is a macro asset. Like everything else, works from the same thing. Liquidity, business cycles, secular trend.